All right, welcome into Market Day Report. Almost said Cow Guy Close. My brain is small. Let's take a look and see what these markets are doing. I'm going to start with corn. It was off about 6 to 7 cents the last time. That's where we're at now, I guess you could say. 6.25 cents lower in SEP. 390s last. We're about 3 ticks off the low of the day there, and we've got about a 7-cent range. New crop D's, that's down 6.5 cents to 4.05 3/4, folks. So we are a little lower. We're only half cent off the low there, and we've had about a 7-cent range. So corn, it's kind of sucking some wind, as they say. Soybeans, they too are lower, double digits. We've got a September board that's down 17.25 cents to 10.12 3/4, 4 cents off the lows. Oh boy, what's going to call it about 21 cents off the highs, just to give you an idea. The new crop, no, that's down 16.75 cents to 10.22 3/4. And again, that's about 4.5 cents off the lows and well off the highs by about 20 cents, 19 cents to be exact. That's soybeans. Let's move on to Chicago wheat. What's wheat in Chicago got in store for us? Well, SEP's down 5.75 cents to 5.25 8.25 cents from the lows, 4.25 cents from the highs. If you move out to March, that's down 5.75 cents to 5.70 and that's only about 4.25 cents off of the high of the day. I'm going to try to change that around and report from the highs just to make people feel better. But we're still down 5.5 or 5.25 to 6.25 cents across the board. Let's move on to hard red in Kansas City. That's down about anywhere between 2.75 and 3.5 cents. We're down 3 cents in SEP to 5.50 and that's only about 2.25 cents off the high of the day, well off the lows by about 15 cents. So there you go. March is 2.75 cents lower to 5.80, and again, that's about 14.5 cents off the lows. That's the good news is we're only about 2 cents off the highs. So that's what we've got going on in Kansas City with the hard red. If we move out to the spring wheat in Minneapolis, that's down 8.5 cents in SEP to 5.83. And the March is down 7 cents to 6.19 1/4. So there you go. That's spring wheat. Moving over to the cotton, and then we'll get to our guest analyst. That's up 41 points in that D's board. That's cotton. 69.62 is last. Hasn't really moved since the last time we visited. Let's bring him on in, a fan favorite, Tommy Grisafi. He's a big friend of the show here and Cow Guy Close. Tommy, a lot of red on the screen today. I guess if you could plumb for some decent news, we're off of the lows in some of those contracts. But all in all, we just don't see the buying.
No, and it's a challenge. This is a nasty time of year where we can continue to go lower than you think, and we will have better days. If you want the good news, is that ag's going to have some great days ahead of it. And ag just came out of a great cycle. A couple things that should have caught your attention. Literally, people, running to the dealers to pay $100,000 over list for a tractor or combine. Whenever you stretch the rubber band too far one way, you stretch the rubber band the other way. And you're older, and you don't have all your hair. I don't know if you know that, but folks will notice this when they come back. And so it's nice to have some gray hair or no hair, because you know that in agriculture, there's ups and downs. We came through such a great up. We did some wild, crazy things here. We're 4 years out of COVID. After the close, we're going to talk on Cow Guy about what's going on with McDonald's. Why can't they even sell a $5 value meal? There's some little canaries in the coal mine here. John Deere laying off people should catch your attention. ADM missing earnings should catch your attention. There are things happening in agriculture in the markets that should catch your attention. The reason you may be confused is that the Dow Jones is close to record highs that is totally AI driven by 5 or 7 stocks. And so when you pull those 5 or 7 stocks out, things might not be so rosy. So if you're looking at your 401k, which most people in agriculture own, land, equipment, bins, cattle, whatever, they don't have a big fat 401k unless their husband or wife works in town and they've been saving for 40 years. So the agricultural economy is totally different than the real economy. Now, real quick, before we go on break, if you're out there driving, I just recently went from Indiana, Illinois, Iowa, South Dakota, North Dakota, Minnesota, and back around. Crops look great, and the roads were packed, Scott. I hit traffic in almost every city I went to. I sometimes had to wait to get gas because the gas station was busy. But the person working at the gas station is not doing well. And now that trickle-down effect's really going to hurt people. Last but not least, before we go on commercial break, and this is really important, the American farmer who owns land is still incredibly wealthy. It's all the people around him that don't have that wealth. So an incredible amount of wealth is being held by so few people. If you're rich, good news. You're still going to be rich. Anyone else, things are changing. Back to you, my friend.
I kind of alluded to that this morning on the radio, but you're right. That's what inflation does. I mean, if you own land, it will inflate in value. If you own stocks, they will inflate in value when you have an inflationary period. And so the folks that have that are the upper 10%. You know, like I say all the time on the show, the upper 10% of America owns 93% of the stock. So that's, you know, so inflation actually drives a wedge in between the rich and the poor bigger than there ever was before. That's why it's such an awful tax. So we can talk more about that later on today, but that's a great way to sum things up, Tommy. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading, Valparaiso, Indiana. We'll be right back after this. All right, welcome back to Market Day Report. This is going to be the moo and oink part, right? The live cattle, lean hogs. Let's take a look. Let's bring up live cattle. We've got October just down 7 cents, 3 ticks to 186.72. Folks, not a lot's going on here. Got all the way out to Feb. That's only down a nickel. We're pretty much unchanged across the board. 188.57 is last in Feb. Nothing going on in live cattle. All right, move right along, he says. Feeders, a little bit, well, there's nothing going on there, too. Come on. September's down a nickel. 256.02 is last. You go all the way out to Jan, that's down 82 cents to 251.37. All right, finally, lean hogs. What's going on with lean hogs? Let's start with what? October, that's down 45 cents to 74.37. So we lost a little bit of our mojo here. We're only about what? That's now a dime off the lows in October. If you go out to Feb, that's down 62 cents to 71.22, and that's just one tick off the lows out in Feb. So lean hogs on their heels right now as we speak. Let's bring them back in. Tommy Grisafi, Advanced Trading, Valparaiso, Indiana. What are your thoughts here, Tommy, on livestock?
You know, livestock guy better be looking over at the grains and say that's going to be us in 3 months, 6 months, a year. Could be longer. There are some really great analysts who understand livestock. Matter of fact, that's all they do is livestock. And they have a better feel for it. The cash market's still on fire. We could see if we could hold this up. We're coming towards, I would say, the end of grilling season. I want to say hogs traded limit down yesterday. If they weren't limit down, they were real doggone close. And that hog market, the math doesn't make sense. I know the price of the corn came down and the meal came down, but with the elevated interest rates and the low cash price of those hogs, tough sledding for the hog producer. So truly the cattle producer, and I got to spend some great time at Ag PhD with some cattle producer influencer type people. They were really cool. They are still bullish and optimistic and charismatic. I would say, to go as far as, they had a cavalier attitude, and I was a little worried about them because although things look good right now, I've done this long enough to know what in the next year or two can look like, especially with the economics of what we're going to talk about here on Cow Guy Close. With if the consumer's having a hard time buying a hamburger at McDonald's, what are they going to do for a big ribeye? Back to you, my friend.
Well, I mean, we know what's happening. Some of these restaurants are also going out of business too, and I mean, that doesn't have to be the case all the time. But I think that with the prices that where they're at, and you want to make sure you've got protection. But you know, I always say this because I was so surprised to see the rug get pulled out from underneath these guys at the end of, say, last year. The fundamentals hadn't changed. Nothing in the field changed. But boy, oh boy, did sentiment change. And so if you're, like you said, if you're a cattle guy or a rancher right now, I'd make sure that I had that downside, sewn up. Also, just because what you said also, that we have these weakening data points, these indicators that are telling us that consumer is struggling, and there's no way about it. And if you're the CEO of Kroger or CFO of Kroger or Walmart or McDonald's or some of these other places, yeah, it's absolutely the case. So you can't deny it. Got to make sure you got some coverage, a little bit of a safety net. Never is going to hurt. Tommy, thanks for coming on. See you later this afternoon. Tommy Grisafi, he's with Advanced Trading in Valparaiso, Indiana. So he makes some good points.
Great stuff as always. Thank you, Scott. Thank you, Tommy.